Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of the Chicago soybean complex. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of these patterns, levels, analysis, or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that.
Chicago soybeans. Okay, so it's important to once more take a quick look at my longer term monthly charts. As I highlighted 20 weeks ago, there had been some very interesting actions taking place here. So the market, since as far back as the lows seen in August 2024 till October 2025, built a sideways action. I noticed this action 60 weeks ago, just over a year ago, and I'll expand on that part shortly. But I just wish you to see that this sideways action had a breach on the upside in October last year and a second more serious breach in January this year. And though March and now April's patterns are indecisive spinning tops, March still managed to make the highest high back then since June 2024, and May this year has made the highest close since May 2024. Additionally, it was a second consecutive month that prices closed over, or third now, closed over the declining mauve 3-year moving average, currently 11.39 3/4. This mauve 3-year moving average had capped the rise back in November last year, and such a move over it was and is important. Now, I previously cautioned about the possibility of a longer-term false break on the upside, but with those closes over the 3-year moving average and still higher up, even though they're indecisive, the last two, I have for at least now removed that warning. We must now look at what will be next above, and that is the bright red neckline, which is currently at 12.15 3/4, along with the declining 5-year moving average, which is currently 12.64 1/2. Back now to my daily chart, and you can clearly see that the same bright red neckline is a little above the current market. Pierced, but not as yet broken. So the very recent action has seen a possible small bright green rising wedge pattern, which is currently 11.75 1/2 to 12.06 1/4, formed over April. This from an earlier sideways action that exited a small bull channel. Now below, the green short medium moving average is currently at 11.79, has upheld prices more or less throughout April, acting as a proxy for the bright green uptrend. All this action was prompted by the weekly key reversal up seen 3 weeks ago. In the bigger picture, prices are still well within the dark blue December 2024 to August 25 bullish Andrews pitchfork, in between a dark blue middle time above, which is currently at 12.40 3/4, and a dark blue lower time below, currently 11.21 3/4. Interestingly, just beyond the bright red neckline and before the dark blue middle time is the 50% Fibonacci line of the April 20 to August 24 move at 12.22. I suspect this finally stopped the rise we saw in early March after the bright red neckline and the dark blue middle time had eroded it. Chicago soybean meal. The market continues moving up nicely within the bright red late September 25 to mid-January 26 bullish shift pitchfork, specifically between the bright red lower time below, which is currently at 3.1260, and the overhead bright red middle time above, as currently at 3.3930. Now this middle time has been especially good at capping prices since late February. A little below we have the significant dark blue trendline extension, currently 3.1170, and that's of the July to September 2021 descending triangle, which has acted as an attractor and then later as a base for moves higher. Now, we also had the 50% Fibonacci line of the May 24 to July 25 move at 326.20, capping prices. But the market is now seemingly pushing up through this, though admittedly we are below it once again today. And this is where a word of caution is worth repeating. I said 6 weeks ago, and I quote, should prices turn back up, especially if we start closing over the 50% Fibonacci line, then the next choice will be the bright red middle time. But a word of caution, you see the bright red middle sign is now awfully close to the 2025 high at 333.5, and they together may be a stronger resistance than each individually. I suspect any reversal back upwards will very much depend on maintaining what we have seen since the beginning of this year, with the low in early to mid-January. We have so far had rising lows, a very definitive bullish sign, and that depends on the market not pushing down below 308.90, end of quote. Indeed, what we have seen since the start of this year, bar one single aberration, is the market caught between the bright red lower time below and the bright red middle time overhead. For now, I'll continue to watch this bull channel, this proxy bull channel develop. This leads me to my final point and a word of caution. This commentary would not be complete without my discussing a portion of my commentary, which I've repeated now for 152 weeks, so coming up now for 3 years. It is the annual key reversal seen here at the end of 2023. I said back then, and I quote, "I now only need to remind you once again of my words when I pointed out that Chicago soybean meal was about to have that rarest of patterns, an annual key reversal down. This duly came about at the end of 2023, and we have been living in the shadow of this pattern ever since." End of quote. I've also added ever since, and I quote, "If there is only one thing you take away from any of my musings, let it have been those words." End of quote. For nearly 3 years, the shadow of that pattern has darkened the skyline of this market ever since. I'm starting to wonder if prices are now finally exercising that shadow, but please bear in mind we are still significantly below the close of 2023. Chicago soybean oil. There is one pattern here that has defined moves higher this year, but is now breaking down. It is the bright pink March to August 2025 bullish Andrews pitchfork, with the bright pink upper tine, currently at 73.07, capping the market until the day before yesterday. However, what is noteworthy is that we saw the development of an ascending triangle over March and April, which has now turned out, it seems to be, a bullish halfway hesitation. Last week, prices broke up through what seems to be the top of the hesitation part of the halfway hesitation, specifically the congestion between 68.71 to 69.12, made up from the June 2008 high at 68.97 and the July 2023 high at 69.12. They next went through the early March high at 69.90 and the June 21 high at 70.33, as well as this week pushing up through an earlier all-time high from 2008 up at 72.67 and making the March action into the hesitation part of a very large bullish halfway hesitation. This thus leaves us now, excluding the idea of an ascending triangle pattern, this leaves us now with a few distinct possibilities for the bullish halfway hesitation. Thus, if we measure from the start of the February low, then we have a primary target X up in the 75.40 area, so not too far above, and a harder to reach secondary target X1 up in the 82.10 area. If, however, we measure from the deeper December 25 low, then we have a primary target X2 up in the 78.45 area, and a harder to reach, much harder to reach target X3 up, secondary target X3 up in the 87.20 area. And that's right up off the top of my daily chart right now. I'll be interested to see how the market deals with these potential targets.
Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.